Peace and blessings, everybody. Welcome to the Sauce Factory Wednesdays. Okay, you already know what time it is. We're gonna start off with some fibs today. Today we're going over some Fibonacci retracements and extensions, talking about the importance of the levels from the 23 to the 78, even the 88% retracement levels, and how they stack up next to each candle, and looking at candlestick placement to understand when you have a legit trend versus a fugazi trend. So, without further ado, let's get cracking. Do do do. So last night and yesterday, I don't know you was on the floor yesterday, Lee, but so we're looking at this trend with CL, right? Looking at this nice little downtrend. Boom. And we knew like, all right, it was gonna drop here. So by running our field, because we know we're in a downtrend, high to low, we looking for this set retracement. Why are we running it like that? Because we just watching the rest of the trend, understanding these is our last swing high levels, and we failed to make new highs, right? So boom, boom, lower high. We did get a definite little pop up with a shift here, but we still overall win a downtrend because we never came back to 83, never retested 82. So we want to run that retracement from here to here to get this week price action. And at your current looking at it, right, we made a 61% retracement. This is a 1 hour chart, right? So last night was dropping down, taking out this sad low here. All right, cool. Once we took that low, price reversed that grade. That took out your market liquidity here because people had these stops placed here because they was going long, looking to target this said high, right? So let's put my handy dandy icon at do right. We're gonna say people. Some people went long here. That's kind of a big. Let's drop that down. They went long on this candle. Some people probably take their breakout and they stop loss down here structure, right? So other traders know these things, so they're gonna definitely try to take them boys out. So when they kind of spin a block, guess what? They went long here. Boom. Looking for this, right? This was their target. Some people love to do that. That was their target, right? But before they did all of that, the other trader said, "Oh, that's cute." They know good and well they was gonna take it up to there, right? But what they did was they came down, we stay, and they swept lows, right? Bing, bing. So when you look at it, if you would have ran your fib from swing low to swing high from this trend, say, oh, it's an uptrend. Right, every day we're gonna switch these up. You clearly see we made an 88% retracement. If you want to say, all right, we currently in a uptrend, but since we know what time it is, right? We already know what they're doing. But remember, you don't have to stick to the hard rules. Say, hey, I'm gonna run the fields from here and do all this. Because a lot of times you're taking in additional information you may not need. If you're looking at it, this is from Tuesday price action all the way down to Wednesday. The New York market opened on Monday because this is the Asian market Sunday here because this is the futures market, right? So when the New York market opened up, this is our trading range for the 5 day week. We starting it on Monday and they're gonna end on Friday, right? So currently, from last week, we finished our uptrend here at 82.49, and then we shifted into a downtrend for 2 days. This is the third day we are recovering, right? It started recovering 4 a.m., 5 a.m. Wednesday morning, which is in the London market, rolling to the New York. We start recovering, but technically, this is a retracement that you marking off this downtrend here, right? Let's say you only want this information. Say, okay, cool. If I want to trade this up, well, I want to read this. But if you're still saying, hey, I'm overall bullish here, let's clean the chart up real quick. Get stuff out the way. All right. Let's say we are not paying attention to that. Let's say, hey, they ran it up, guys took profits, and if you're crazy enough not to take profits here, doing all this chop, then you're gonna get finessed. They're gonna take you out. But they made an 88% retracement. Now, 88% retracement and a bounce. Remember, so Fibonacci's also support and resistance level. They number calculated support and resistance. It found support at the 88%, right? This happened to be at a liquidity grab right here from 4 a.m. on that Monday, but we're currently at the 38% retracement and rising. Oh, remember, our negative 27 is sitting at 83.12, which is the last swing high, right? That's what we would like to take out because we definitely want to take this high and we definitely want this high over here, right? I wish they'll let me favor these icons. So I definitely want this swing high here. Clone. So your TP1 would be this high, then your second high over there, right? You'll want those two highs to be taken out. Initially, most traders going to be shooting for this high. So they got in, somebody put their stop loss down there. I guarantee you that. And he looking at 10x up here. That just all back. If you can swing it, you swinging it, right? And I'm sure they have some form of risk management. Some people don't move stop losses. They don't believe in it. They'll scale out of position and leave runners and let the stop loss stay where it's at because they want the bigger move. That's how they trade. That's what some professional traders do. That's what some retail traders who've been in the game who swing like that. That's what they doing. They leave parking a stop loss here and leaving it, letting price run off because they had multiple positions. They scaled into this trade here multiple times, probably on this pivot point here. We're gonna drop down to a lower time frame and I'll break that down to you, right? But they scaled in multiple times, and then from there they took profits on the way up, and they still looking for their 10x trade. So you have the 1 and 3s, then you got your 1 and 10s. If you can get a couple of 1 and 3s, they'll pay for the stop loss for that one trade you want to let go to 1 to 10. All right, let's drop down to a 12-minute chart real quick. If you use a 15, hey, be my guest. That's all you, but I'm going to use it for 12. So that's what I mean. So looking at it, the market opens for crude oil right at 9 o'clock, 30 minutes before the New York. Let's hop like that. Boom. So here's your opening price right here. This is your opening candle for the New York market for the crude oil. Notice what the market did. From the pivot, it went up and then it drew down, right? Boom. This was the scale out process. So most traders took the scalp from point A to point B. Then they use this opportunity to sell down to force some inducement because they needed more liquidity because they have a higher target in mind. But how you get there, you got to force people to sell out so you can get more position, so you can build your position up, right? The only way you can do that, you got to drop the price rapidly. But most traders don't see that and they get a little nervous, right? When they're not really reading their candles. Understanding like, hey, they dropping it, but look what they doing. They get one massive drop, then they slowly start creeping it down. And you saying, hey, it's bearish. I'm taking out. I'm going to run. I'm going to drop this. And I'm going to trade it down. We already in a downtrend. I'm going to keep trading downwards, right? But then they do this. Indecisive candle, bullish engulfing, boom, 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 boom. Play around a little bit. And they slowly scoot right out of Dodge. Now, understanding that you run a field from point A to point B, look at what do you have, right? Because you can also do this. This is totally acceptable as a micro trend. You can run a fib on it. Okay, let's get that line up. Look what we did. 38%. Let's hide this. Let's get this fib out the way. Keep everything clean. So you look at it, right? We made it 38%, almost 50% retracement on this micro trend. By drawing this fib and riding the wave, You say, hey, they stopped at a 38% retracement and they going sideways. Let's add the oscillators into this, right? What we doing here? Oh, guess what? My swing above the zero level. Cool. My squeeze is pulling back, but it really ain't flipping. Guess what my MACD doing? It's also above the zero level. All it did was reset. Now it's curling up. But remember, your MACD had low momentum. The squeeze also had low momentum, right? Just read the bars. You know how to. Oh, snap. Get out of there. Go back. So you're already looking at it, the size of it. Remember, I told you about the size of the oscillators. When they real skinny like this, it's low momentum and that can cause problems. They can cause choppiness in the market. So you want to keep your eye on that, right? But as you see, it's curling up. I'm but a zero level. This is a 12-minute chart. So that's a day trading time frames. When you get to the 10 minutes and up, you're day trading, right? 5 minutes and below, you're scalping. 10, 12, 15 minute and up, you're day trading. When you get to the 1 hour, 4 hour, you're swing trading, right? But this looking at it on a 12-minute chart, we've been crossed over back here at 5 o'clock. We got above the zero line at 6 o'clock. Okay, great. By 7:48, before the New York Open, they was trying to pull back, reset some oscillators, take a little bit of profits, and also get some inducement going to get people to convince that, hey, this is the high for the day. We're going back into the bear side of the market. We're going to ride the wave. A lot of traders cannot get out of the psychology to switch fast enough to not take the counter trend trade. Some people lose track, stop paying attention to the oscillators, and they start saying, hey, I'm going to trade the market down. You seen that candle on the 12-minute? Come on now, that's a bearish candle. We already downtrend. We going down for the day. But in reality, no, they went down already. It was a major down move into the Asian market, all London market. Now it's time to reverse, and we're going to pull up into the New York, right? So understanding when it hit that 38%, that's a great spot, especially for the uptrend to start going up, right? 38, 50%, those are two great spots. Those are great retracements. If you see one stop at the 23 and the 38, that's a strong trend to say, hey, we're going to push up. I like 50 and 60% retracements because those are great buy-in spots. They mean it was extremely discounted. It was 50% off, 60% off, just like a fire sale, right? Those are important. If you don't get those, then that's when you have deeper retracements or the move don't last as long or it's not as strong, right? So notice this was a high. Look what they did. They pulled up again, dropped it. And that's another little secret. You do not have to move that fib. You can actually draw an additional fib. Run that. We can actually draw one from here, but we're gonna move another one over here, right? Boom. If we follow that trend from the same swing low, guess what we have here? A 50% retracement. And that's what really went off, right? When they discounted 50%, you had the boosty candle come in, boom, took off running, right? So let's flip this template two. Now, if you really want to start messing it up, from that retracement point, take the chart to the same, take the fib to the same level. And we want to flip this one. Yeah. And want to come to this low right here. Boop, boop, boop. Doop, doop, doop. Now, as you see, right? This is our low. From there, look where you came. You had an 88% retracement, right? 88%, the same as before. Plus the 50%. So we know we had a strong zone, right? This is a very strong zone. By adding multiple fibs on every pivot, as long as you keep using the same high, but the pivot points, right? So see how this was our low here. This is the new low. So that's low, higher high, higher low because the market is shifting up, right? Higher high, we did made a new high here, higher low. Still above this last previous low. So you can actually run a fill from this higher low to the new same higher high. Use the same higher high here, right? Boom. Now you line it up this is an additional support and resistance. So not only have support from this pivot, you also have support from this pivot. Okay. So one, bing, and two. There you go, right? So using those to support this set candle here that came in at 1300 hour, right? So this is the things you pay attention to. And you can add these things, or you can just use one. It's hot. If you want to get that fancy, cool, get that fancy, right? But that's what you want to do. Now, when I promised you about the candlestick placement with the fibs, when you're looking for something to go off, right? Look at how the candles are lining up. You see how this candle wick back over here? Great candlestick placement, great candlestick placement. Right here. Now, this is a said problem. Later on, right now we ain't got to it yet, but this is going to create a problem because it did not place correctly. If you look at where these candlesticks placing on each candle, you'll see either they 90% of the previous candle, 20%, or 30-some%. This is a great candle too. Watch this. I'm going to put a fib on a single candle here. From high to low. Boom. See, this one only retraced, it didn't make it to the 23%, right? Okay, cool, great. Watch this. Now we're gonna go to this candle here. I'm gonna change it. My other fibs look way better, so they're easy to see. So you know I ain't making this stuff up. This is what you want to pay attention to, especially when you're about to take off on a trade. When it's pulling back, notice it's 80% of this candle. This candle drew down 80% into this, right? Even though it poked out a little bit, the candle opened here, made the wick, then went off. If you taking an up trade, you prefer the candle to open up first, go down, then go up. Same thing, you going up, right? I want to see the wick form first. Then once the wick is created in the opposite direction, so if this was it opened up here, went bearish first and then go bullish, that's great. Because if it don't, probably put in the mirror boost or some other little crazy candle, and they're gonna pull back eventually on the next one. So always like to see that, right? So notice where this candle's sitting at. Then we can move this. So I'm gonna show you, keep showing these examples, right? Of how these candles like to place up. Notice 50%, right? This candle drew down 50% of this candle, right? Okay, cool. Look at this little weird candle. Boom. It went down lower. Why? Like I told you, this candle didn't stack up right. Right there. There we go. See how this one didn't make it? It barely made it to the zero level. So guess what? They pulled down a little bit, but they'll be back for this. They are not finished with this area. If you mark this on your chart tonight, I guarantee you sometime tomorrow or tonight, they'll be over here. They coming back to this area soon. But it's all about candlestick placement, where the candles are drawn into the previous candle. Notice, look at that. That's cool. 38%, 50%, right? Let's measure that out. We don't have to guess. We'll line it up. Wick to wick. You want to go wick to wick. Boom. 50%, right? See, like I said, they stack up like this. When you see them stacking up like this, that means they don't have to come back. They're going to keep going. If it does drop more than that, it's a reversal. But if it's in a clear uptrend, they're going to stop into the previous candle. They should not take out the low of the previous candle. They should stop unless they have an imbalance somewhere. When you start noticing the imbalances, that's when you need to know, say, hey, this is when I need to start paying attention. This is when I need to start exiting the market. But you don't have the imbalance, and you're like, okay, smooth. You good. Don't worry about it, right? So those things you look for as the market progressing. Look at this tiny price action. Like here, you got an order block, 3 candlestick order block. Look where they pulling down into, to that zone, right? Just in case. I know I see it. I don't know if y'all see it. So we're going to put a little box right there. Okay, great. So understanding that they draw into these previous candles, got order blocks form, and then you can work the fibs. Now, we can easily run. Let's say, all right, cool, we got that little pivot point. I want to run to the last swing high. A lot of times I'm tracking price like this. I'm just running fibs. Say, hey, wherever you pivoted, I'm gonna drop a fib. Like here was a high, it slightly pulled down, stop right above the 23. So that means still a strong trend. They don't have enough to force it down. Right? That means zero bulls in control. Once they stand in the 23.38, it's zero bears in the market, right? Zero bears. But when they start coming down here, that's when they trying to, all right, it's a couple of bears in there trying to get a quick scalp. The Bulls said, all right, cool, we got to take a break. We had our way too long. We got to let them take over for a little bit. But once they get down to that magic number, which is 60%, 61%, some people call it 60%, whatever you want to call it, right? 50%, 61%, 65%, 78%. Look for some form of resistance because if it's a true uptrend, they're going to hold it there until they get to that spot. They need market liquidity to say, hey, we're going to flush it down. Everybody get a turn here, right? The Bulls had they turn, the Bears get they turn. The Bears had they turn, the Bulls get they turn, right? It's a backwards and forward, give or take, give or take. So understanding that, you have a pleasant time. Now let's go over to AMD. We want to switch it up. We ain't gonna stick on one ticker all day long. I'm gonna give y'all multiple examples and want to keep jumping. All right, so y'all stay smooth with it. Let's get up to our chart real fast. Let's get it. All right, cool. So currently AMD. You clearly see we got a nice little downtrend coming in right now. So what you initially want to do, bring your fibs. High to low, understand where you're going. If y'all already to watch any of the previous videos or y'all know how I like the chart, you mark your weekly levels, you'll understand where you're currently sitting at in that marketplace. And then you'll see like, hey, we going sideways to do what? Pull back, right? Notice we start here, right? They stop, boom, came to the 23%. Strong bear market, downtrend, right? Strong bear market, they did not have it. Okay, great. Come down here. Let's say you move the fib, but they stop at 23% retracement. Did not have it. Boom. Didn't quite get there this time. Boom. Well, they got to 23%, then dropped again, right? So you can start predicting like how far they're gonna pull up. And we in this channel 910, they're gonna go to 184, 98. Next, they fighting to get up there anyway. They're gonna try to take out a last swing high, like they did here, right? Had a nice little displacement, then price drop. Once they got their little displacement on, they drop in price. In this case, they stopped at an order block, OB, before they flipped it around, right? Boom. Okay, cool. They bounced, did a slight. They didn't. I don't even think they got the displacement on this one. They had a gap, but you didn't get no displacement. They just straight failed. Yeah, Bears got this one, right? But if we follow the fibs, we know for sure. Like, all right, cool. Typically, they hit a 23% retracement. The Bears are really trying to drop this market here on AMD, and they trying to get it to a very discounted level. We go scroll back, look to our left. Let's get to a 4-hour chart, get a little more candles on the board, or less candles on the board in a sense, right? And we are not going to worry about the current downtrend. We're going to flip and say, well, what if they just taking a little break? It's really a bull trend. We're going to go from this pivot. Where are we at? 78%. It's 78% off. AMD is a great company. Semiconductor world is really flying out of control. They just need some more innovation like NVIDIA. So what would help them pop off if they fundamentals get better, right? So this is a fundamental trade at these levels. What on the fundamental side is going on that'll help them go off? Or will NVIDIA start running again and drag them up with it? They're gonna ride their coattail because that's what everybody do. They say, well, NVIDIA almost $1,000. I can't afford that one, but I can afford AMD. They number two. Them and Intel is fighting for number two. Me personally, I put AMD over Intel in the out the week. So guess what? You're gonna go put your money in there. Currently, they at a 78% discount. Why not buy more shares, right? Unlike the 227, that's full price. You can get them at 78% off. That's a hell of a deal. Speaking for the 2024 market, right? What was they last low? Yeah, technically, this is, let's back out a little bit higher, right? Let's go to a weekly chart real fast, and we're gonna look for a better low. So we can go from the 23 pivot, 2023 pivot, right, to the current year, top of the year. Boom. We had a 38% discount. Once you back out and look at the big picture, right? Always see the forest amongst the trees, blah, blah, blah. Back out, see the big picture. You had a 38% discount. In a couple months we was here, right? So that was 78% discount that you at dollar cost averaging. Buying in at 50, 60% greater, that's still a great spot. Even on the trading, if you want to say, hey, I'm taking leaps, well, it's currently this percent off, right? If you want to look at it from a long term spectrum on a weekly chart and you're really trying to get in there, this is a 38% discount. May not be nothing for you. Maybe they got plenty more room to go. There's a lot of consolidation here, so it look like it's been parked there for a while, right? So that'll be your 50. I got alert here because I want to see them boys get down here, get at least to 61% off before I entertain a position because they are still kind of like on the higher side of things. I want to see what happens. You had two bear weeks in a row. This only week looking pretty bullish, so this one is a little like a retracement to me, or reversal to continue back into the direction of the said trend. But there you go. That's AMD. All right. Let's see. Where are we going next with this? Let's pick a ticker. Anybody got a ticker? Y'all want to see real quick?
Apple.
Apple. Okay, sure. You holding Apple long term or short term? What you looking for? Like
Long term. I know it's below the 200 moving days, so look for long term.
Okay, great. Well, so check this out, right? I am also a very much pattern trader, and this is one pattern I've been watching on Apple for a while now. Nice little M pattern, or better known as a double top. Talk about this thing. Oop. Resistance. Then here's your support level. So currently we got a nice bearish trend on Apple. Was a bearish chart pattern, right? Boop boop. Clone that. This is a breakout. But this pattern will not be it until it breaks out. It got to break out 166.15 for this pattern to play out. Measure move is a $32 move. Boop, boop. I got templates for days, people. I'm looking at 133.26, right? And we run a fib from the swing low to the high. Side high right there. Let's get to this low. We don't want to chart change nobody. Where it be at? 88% retracement, right? It could get halfway there, so I can easily do a 65% retracement, 61% retracement if it do half or less in this ballpark. So 133 will be in the screen discount. That's back. That's a little bit 10 points over the stock price split when it split back in 2021, 2022, 21, one of those years. It split. They opened at 120, 122. I was hoping they got down to 119. Really load the boat at that level, right? That's what I was hoping for, but they never got there. But yeah, definitely. That's what I'm looking at on Apple. Yeah, great long term. Now let's talk about that 200, right? I'm gonna EMA up here. I like the 200, especially for long term buy-ins. Make that purple. Whoop. Okay. Boom. Your 200 right above your 78%, right below the 65. 200 will be migrating to the upside on the weekly chart. And we get to the daily chart. We are currently in bearish territory. They retested the 200, failed. Now they're coming back up, right? Let's clean this up real quick. Damn, Apple below the 200. That's strange right there. They don't want to drop it though. But I think they new poster child is Nvidia, so they ready. They ready to kick this thing out. New toy. Nvidia got them. Pelosi said Nvidia is the new toy. You know, Apple old news. That Apple spoil. Time to toss it out, right? But yeah, definitely. I'm waiting on this pattern. I'm telling you, I'm waiting on this pattern to break out. And when it breaks out, I'm taking them to the dirt and I'm loading the boat when they get down here. When they get to how they do it with, how they deal with gentrification. If y'all familiar with it, run down the neighborhood. Once you get dirt cheap, buy it up at Starbucks, dog park. Yeah. That's why I'm waiting on the gentrification to take place. As soon as it runs down, the graffiti go on the wall of here. Yeah, when they get the spray paint and everything. Yeah, I'm coming in. I'm moving in. Buy the block up. But that's what you do. You want to buy great companies at great prices. How you get great prices? By being patient. Let them get below a 200. They still not at a 38%. That's cool. I like a 50% or 61%, especially going to do long term because as the price start to recover, guess what? That's profits. You buying way up here 190, 180. When it start dipping down like this, you're losing money. So you're gonna have to buy more shares to get that cost to average out so you can get back in the green. But you buying at 50, 60% or greater off the all-time high. Well, guess what? You coming back when they do return back to those highs, you're making a crazy profit. You already up. That's guaranteed you're gonna be say, yeah, I'm up 50% on this position. I'm up 70%. Then once you get to the highs, I'm up over 100%. You winning. That's how you win the game is by waiting for significant drops in the market, get the discounts, and take full advantage. Anybody else got another chart? Y'all good out here, people? Check out. Nope. Okay. All right, let's scroll down. Pick another one I like. ES. Okay, we'll go back over to the ES. Go back to the futures market. Get back in that DeLorean. Yeah. All right. What you day trading or you scalping it? What you doing? What you doing with the ES though? Day trade. Okay, smooth. All right. So check this out. You want to day trade this bad boy, right? What you want to do is look at. All right, we'll run an NQ next iPhone 83. See, iPhone needs you to change your name, identify yourself iPhone. We've been doing this too long. All right, this is what I like to do, just in case for the new people. ES. First, I gotta understand where the market's sitting at, right? So I'll mark out my levels and run through this real quick. Boop, boop. Weekly low, weekly high. Now we'll drop down to a 4 hour chart real quick because we had a couple of days pass by and why did thing will go off? Okay, great. All right, so you clearly see we still inside of this range, right? So what you need to do is mark off your Monday range, your Tuesday range, your Wednesday range, right? So currently this is our Monday range here. This is the low. Because what you want to track these things, right? You want to track and see like how far the market is actually moving with or against you. So there we go. Okay. Cool. All right. Where is Monday high at? So this is Monday high. Boom. This little due diligence. Once you make you a couple of templates, you'll be smooth out here. Don't worry about it. All right. Now, let's talk about Monday. So this was our opening range. 16 points, right? Let's drop down to a 1 hour chart real quick. Okay. Yeah, that's how Monday. So from Monday low to high, we had 16 point move, right? Great. Now, following Tuesday, we had a range expansion. We had some news come out. Rain said that we're gonna do a little sun. It's Tuesday low. Boom. Now looking at it, right? This was your price range. Price went off. Great. Price took the highs. Remember, this was your last swing high. This happened during the London market. They ran up, took liquidity because, once again, like I told you, somebody in here, they seen the pivot, stop loss sitting here, great. But they also had other reasons they need to get up here, right? You had all this candle imbalances. You had a fair value gap right here. You had a pair of orders. This the fair value gap order block. Then you had a pair of orders. They got here and got rejected before. You had multiple reasons why on this chart this thing wanted to go down, right? Multiple reasons. So when they got up here, people seen this trade. They said, okay, bet. I'm running. I already know how I take the trade. You gonna say, well, short position. I ain't gonna go too fancy on you, but you target the last swing low because you already know whoever in that uptrend, they put their stop loss at the low. So you'll take the trade just like that, right? You can't see it visually. There you go. Stop loss at the high, 50-point high. Most people go like right there. You can go to this candle high, this the engulfing candle, elephant candle, like a lot of people still like to say. You can go there. Some people put their stop loss here. Some people put their stop loss here. Totally up to you, right? And once that market start trading into this zone, you say you can have it right at the lip, or you can have it right at the highest point, whichever way you like to cut it. But your target is always the last swing low. Why you think they dropped the price pass here? Because one, people stops are sitting here from the going up in the uptrend. Then also, guess what? They know price like take these out. My stop loss would be great up here because they have no business taking these highs. A candle like this, they have no business with the fair value gap. They just come to rebalance price to fill the gap. Once they fill a gap, guess what? They really shouldn't take that candle out. So my stop loss can sit right above that candle and I should be fine. They take the high. Well, guess what? That just on me. They don't want that candlestick. I was completely wrong. So don't play it, right? So you can sit there. People do it just like that. Risk 28 ticks. What, 99? Great. Now, do you want to say, like, well, what could it really do, right? Let's say, man, where can this trade really go? Did you honestly say from this pivot point or you can run from this pivot point? This is where we go, right? Boom. You say, well, from here to here, it pulled back 50%. Where 50% land at? Oh, right at a fair value gap. How crazy is that? Okay, bam. Where my limit order at? The 50%. Oh man, crazy, dog. That's crazy. Ooh, right. There you go. You target the zero level. You can have your TP1 or TP2 down at the negative 27. But they didn't get there this time. That would have been smooth because the 200 was sitting there. So you never want to be that greedy. If you target the last swing low, you're great. What did you fall into? Another fair value gap, right? They stopped like right there. You had two of them back to back. They stopped like right here on the cuff of it. Barely drew down. How much did they draw down into this? You can measure these candles. All right, there's 23 right at 38% into this candle. completely gulfed this one, tiptoed into this one, and they shot off. That's all they needed, right? When you have two of them back to back, they ain't gonna do the whole entire thing. They may not even go 50%. They just need to get in there, and then they out of there. So you was ready, you was ready. If not, it is what it is, right? But recognizing that, using your fields, placing them in a cool spot, even if you didn't want to go to the last swing high, you could have went right here where they rejected the order at, right? So you can say, okay, smooth. I'm watching more market. This is my low. I'm gonna let them boys pull up where they want to go. 88%. Okay, great. My stop loss at the 100% if I wanted to, right? Smooth. They only got to what? 78? Right at the 78. That's when they start struggling. Couldn't get past it. They dropped. Now, people who went short, they let Jesus take the wheel, fell asleep. Guess what? They stop loss got mopped out, right? They say you didn't exit that trade. Look where you at. Now they want to reverse. Why is that? Because, like I told you, where would I put my stop loss? Here. Well, most traders put their stop loss here. Just for good measures, they took out to here, right? They ran it all the way up to here. What's also here? Boop, boop, boop. Little fair value gap, right? Yeah. Come on now, talk to me nice. But these are things you gotta recognize on the chart that will jam you up, right? These are things Fibonacci will tell you on the chart that will smooth you out. Now, you can easily run a field from there and say, oh, okay, cool. What happened? Rob it. Because now you got a better understanding. 78% retracement. Oh, you great. You smooth. Don't worry. I got you. But you can also run your field down a little bit lower, catch a little bit more of that price action. Let's get this out the way. This thing look crazy now. Right? So you can see, like, I wake up in the morning. This is the range I'm currently trading in, right? Tuesday low is Wednesday. Wednesday rolling around. Look what happened, right? This the Asian market open. They drifting up. Cool. All right. Boom. What they do? Wednesday, they pumped it up right at 9 o'clock. Guess what? They dropped it. Then they pumped it. So this is the pump, then dump, then pump. Now they dumping it again. So it's gonna be a pump and dump, or a dump and pump, whichever one come first. They dumped it first, then they pumped it. But in the London, they pumped it first, then they dumped it by the New York roll around. They got everybody. I told you, everybody get a turn. They let the Bulls have a turn here, create some inducement. They say, oh, get a break of structure, internal structure, right? Then you like, okay, man, it's already down. I go on here, run it down. Nobody expect this crap to fly off the handle like that. But you still above your 200 on a 1 hour chart. That's bullish territory, right? Where your MACD sitting at? Come on, Lee. This is what we was talking about earlier, right? MACD above the zero level. Boom. All your oscillators pointing up. You was already in danger. I'm guaranteed we go to a lower time frame, like a 12 minute. Let's go to a 12 minute. We been up. Damn, we been up. Moment they got to close, but that smooth. Now let's get real spicy with it real quick. I got a couple more minutes. Let's get spicy. All right. So if you watch, as we here now. Where that candle at? 9:30. Looking for that 9:30 candle. All right, cool. This is 9:30 candle. Okay. All right. So this is our opening candle, New York market opening candle, right? Cool. Price trading below. You can literally watch price coming back to his level. They ain't coming back to say, hey, special with force like that. You see, you get a close above on your intraday time frame. You day trade and you say, like, they close above my 50, my 200, or especially a higher time frame moving average. And they coming back to the opening market level, they running. You can safely say, all right, cool. Let me take let me take something bullish, right? This was the last high. That's internal change of character, right? From here to here. Let me make that known. So not only they displace price with a bullish engulfing, so that'll give you a change of character because look how bad they displaced price. That was with force. So when they came up with force, it's safe to say, okay, cool, they get past this high, I can go long. Where to, oh, they got a fair value gap. They're gonna want that. Let me run to that. So there you go. All right. We got a couple minutes. Let's get on to that NQ real quick. And iPhone, like low key, the ES gold or crude oil is way better to day trade than the NQ. I ain't gonna lie to you. The NQ, yes, it moves more, but they don't even it counts the ticks counts less and is very volatile, highly manipulated because this is the Nasdaq 100. Majority of these companies in here are tech companies. Tech companies are very volatile. They fly all over the place. If when the speakers come on, they're gonna do something crazy. So you really want to day trade, go over to crude oil, gold, ES. They're a little more slow and steady. Even the bonds like ZB, all those are great, consistent markets will give you a nice trend. What you want is a nice trend. You don't want all this choppiness. You see this? This is choppiness. It's taking your money. You can make money and it can take your money, right? But you want on the sun, you can just fall asleep in. You got to make sure you're catching the right moves at the right time. But you can catch it with this. That's a little bit harder, and your stops got to be a little bit different. That makes sense. iPhone. I normally I normally stay on with the 5 minute with this thing. I'll be like low time frames. All right, cool. But yeah. So NQ, definitely this thing like the 65, 61, 65% retracement. Like here, right? This targeting this information on Wednesday. High to the low. This Wednesday, high, low, far as we know. Okay, yeah. So this Wednesday high to Wednesday low. Great. This the range. Boom, they pulled up 61, 65%, barely got to 78, now it's starting to tank. The 78 Alfred as resistance into this fair value gap. That you would have had an order sitting anywhere from here to here, and you say, hey, stop loss at the 100. Now, only suck part about this, right? You can actually have limit orders waiting, but you got to have a 300 tick stop loss. That's kind of much, right? That's kind of expensive. That's too expensive for my taste. So you literally got to sit here and wait. Let get to that level 180. It's still kind of much, but this is a 12-minute time frame, right? So then you'll just have to scale into that position. But yeah, needless to say, proper risk management is always key. Never enter a trade without a stop loss. Understand all risks that you're gonna take before you take that said trade. Never risk money you cannot afford to lose. But yeah, that's that little quick little spill. But you do what you want. I'm not a financial advisor, not a fiduciary. Just trying to help you out. All right. So yeah, recognizing the stuff on the chart, using your fibs, giving you target levels, price levels. If they say they take out this low, so you guarantee you can at least trade back down to 0% or zero starting line of the fib, or you can go to the negative 27, 26, right? You have extension levels too. Let's say this market is doing what? Like last night, the market was pretty bullish, right? And we was looking at it, and I'm like, huh, run a fib from this pivot to here. It was like 23. This what was looking at last night in the overnight trading session that we was doing, right? It was looking at the 23%. Then it fell down currently at the 38 and it's drifting to a 50% discount. Now, as it drift down, that means it's new levels of resistance. Look what happened to the 23. Old support become new resistance. They was your friend, now they your enemy, right? So you burn your bridge, now them boys holding you back. You ain't popping like you used to. You ain't live at 5. You can't help nobody. You fell off. Whoop, whoop. They ain't talking to you no more. They blocking your phone calls. That's what happened. and keep sliding down. If you get below the 38, guess what? That's a new level of resistance. Understanding the fibs are not just calculations, they also support and resistance. So you put them up on the chart. Can I get over that level? That is resistance. It's not just a level, it's resistance. They there for a reason. It's happened to line up very nicely. So yeah, that's that. All right. Any last minute questions? So we wrap this up.
Great class, Neil.
Oh man, no problem, no problem. My pleasure, my pleasure. Pleasure, my pleasure. Hope y'all learned something. This is recorded. Will be posted to the YouTube. Y'all already know. If you have no questions, let me stop. Go on there, stop this. Stop sharing. Man, let me